Stock markets around the world have taken a battering this week, mainly over concerns about the European debt crisis, but also fuelled by worries over the strength of the Chinese economy. In recent times, China's powerful manufacturers have been hit by a collapse in exports to the United States and Europe. That's been followed by a series of strikes by workers demanding better pay. Now there's an appreciation of the Chinese currency, the yuan, which is going to make Chinese products more expensive overseas. If this results in less Chinese manufacturing, it would mean a drop in demand for raw materials, including from Australia. But the huge pressures on Chinese manufacturers right now could actually be good for the country's economy in the long run. That is, if one key change can be made. China correspondent Stephen McDonald reports.
From the bowels of the Zhenjiang motorbike factory, the machines begin to rise. This is the beginning of the largest assembly line in Asia. Since 1985, it's grown and grown, along with demand for China's exports. But the world economy has now changed. 9,000 workers are employed in this huge factory in southeastern China's Zhejiang province. But many of their jobs were threatened by recent collapse in sales to the United States and Europe.
Well, we can't predict what will happen with the market in the USA and Europe. Our sales volumes have been decreasing. We can see that from our export statistics, but the decrease has now stopped. However, for next year and the year after next, we're not expecting any increase from them.
China's economic miracle has been driven by exports. Its double-digit growth, year after year, has been the envy of other countries. So when the world economic crisis kicked in and overseas orders stalled, there was good reason for concern. To avoid companies closing, job losses and social unrest, demand would have to come from somewhere else.
Last year, when exports were declining, the Chinese government tried to stabilise the economy. It launched a policy of expanding domestic demand and increasing investment.
This factory is now directly benefiting from a government policy aimed at boosting consumption within China, because 90% of its local sales are outside the big cities. The government is offering people in rural areas a 13% subsidy on the price of a new motorbike. It's designed to bolster farmers' living standards and is part of a wider strategy of increasing homegrown spending.
With the rural market, when our farmer brothers buy motorbikes, if there's a 13% discount for potential buyers who haven't yet made up their minds, the discount will be a great encouragement for them to buy.
The company says that an increase in local sales is shielding it from the worst of recent economic hardships. This is what you get when you rev up Chinese demand. Last year, during the world economic crisis, they built 1,200,000 motorbikes here. In 2010, they're planning to make a whole lot more. In recent weeks, factories across southern China have seen a series of strikes by workers demanding better pay. Employees who've had their salaries stuck at the same level for a decade or more have in some cases successfully had their pay doubled. China is also seeing its currency appreciate, making its goods more expensive. But this has also made it cheaper for this country to buy high-tech machinery from overseas. Policymakers here want China's production model to change. World events seem to be pushing it in that direction anyway. Stephen McDonald, Lateline.